Should be going live right now as we speak. Good morning, good morning, good morning. Happy February 7th. My name is Daniel, and today we're going to talk about election year trading. There are two things that everybody needs to know about election year that I feel like is important that we discuss today. So we're going to dig into that information. Just do me a favor and let me know in the chat, if you could, that everything is working as planned, as designed. Make sure that you can hear me, you can see me. Let me just take a quick look and make sure everything is going the way we need it to go. Hey, Darrington, thank you for being here. Brad, hello, hello. Absolutely, anytime. Donald. Let's see, I know I have Vantage Point, but I work 62. Okay, all right. Working some crazy hours there, my friend. Looks like things are working okay. Hey, Lightheart. You can hear and see everything is working. Michael, all right. That's fantastic. That's what I was hoping for. Thank you for joining today's session. My name is Daniel. I am with Vantage Point AI. And we are going to just spend some time looking at the markets, talking about some things specific to election year that you can use to your advantage. Obviously, I'm not providing trading advice. I'm here to provide some trading education and dig into the markets from my perspective. I've got over 25 years experience in the markets, and I've been utilizing artificial intelligence technology for the last 14 years now to understand what's going on from a prediction standpoint in the market. So we're going to walk through some of that today. I just want to make sure everybody's up and in and we're working everything. We're Claudio, hello, John, Beverly, all good, Justin, okay. All right, I think we are good to go. I'm gonna smash a heart there just to say thank you all for joining. As you can tell, if you haven't attended one of these live sessions before, I keep my eye on the chat as much as I can. I want to stay involved and keep this an interactive conversation. If you have any questions or you want to dig into any information as we go through today's session, then pop it into the chat and I'll do my best to respond verbally, as well as I have my team here behind me, behind the scenes, I should say, keeping an eye out in case I miss something. We are here to help in some way, shape, or form. Hello, Lori. Thank you for being here. So today's session, let's talk about what today's session is all about. Election year. 2024 is an election year, and you're going to hear more and more about this as the year goes on. There's a couple of things that are important to understand about election years that I wanted to share with everybody that joins today's session, just so you can get a perspective on what happened historically based on election years. And some of the information that I'm going to give you today dates back to the 1900s, right? We're talking about many years of data and information going into the analysis. One of the things that I did want to throw out is the Dow's performance. And hopefully you're listening. The Dow's performance during an election year over the last 123 years has a 7.12% average return with a positive rate of 70%. Let's stop there for a second. I want you to think about that. This is historical information, obviously. I'm talking about the last 123 years. Every year is not an election year. Every 4 years is an election year. So of those election years, just take a second to think about that. The Dow has a 70% positive rate with a 7.12% rate of return during an election year. That's this year, 2024. That means that we are expecting a positive or a bullish year in the Dow, in the markets, from a market standpoint. That's important information to understand. As a matter of fact, there's only been 6 years with negative returns during an election year in that 123-year period. That's since 1900. Only 6 years. I agree with you, Justin. That's pretty good information to know. Now, that doesn't guarantee anything. I want to make sure we're on the same page. I'm not providing guarantees. I'm not providing advice. I'm just telling you stats available to the public everywhere out there. And some of you have access to this information, these stats. Some of you don't. But just take a step back and think about that. The Dow has gained, over 7% over a 123-year period. That's a pretty valuable stat. All right. Now, let's take a step further. Sector-wise, there are some sectors that are very, very strong. This is the other piece of information I want you to understand during election years. The strongest sector in an election year, energy, by far. From a return rate standpoint, it's one of the strongest sectors. Financial sector, it's another one. We'll take a look at both of those sectors today from an ETF standpoint. Heck, we can even look at some stock forecasts from those individual sectors, as well as industrials or capital goods, depending on how your sectors break it down. Those are the three top performing sectors when you break it down by sector during an election year. Hopefully you wrote those down, right? That's when you start thinking about following the money, when you start thinking about stacking the odds in your favor, knowing that this is an election year, and election years are traditionally higher years. Over the last 123 years, it's produced a 7.12% average rate of return, and those are the three strongest sectors. And in some cases, those strongest sectors, like energy, has a 13.67% rate of return. Energy, in an election year, has an average rate of return of 13.67%. All right. Financials, 10.94%. I'm just looking at my notes here. Obviously, I'd love to be able to memorize all these stats and all this information, but I can't. Industrials, let's think about industrials, and we think about 9.44%. Those are pretty strong numbers when you ask me. So it just makes sense that today we spend some time looking through those sectors and understanding how we can use that information to our advantage, because that's about the year, that's about the sector, that's 10,000 foot view, and we got to narrow in on what does that tell me about now. Here's a bonus fact for you, a bonus fact about right now. February during an election year, unfortunately, is one of the weakest months, if not the weakest month of the election year. We are in February. That doesn't guarantee that February is going to be a weak month. Just understand, over the last 123 years, this month, the month that we're in right now, is one of the weaker months of the year during the election year. That means something. It doesn't mean that it's going to be a down month, right? It doesn't mean that it's a month that you can count on as being a failure or anything like that. It just means that it's the weakest of all the months. And the fact that February is just getting started, and yes, Costas, those sectors I was talking about are underperforming so far this year, which means there could be some real opportunity there, which is why we're going to dig into those today. But also from a February standpoint, that means that this month, we can expect some consolidation, right? Even some drawbacks and weakness, not necessarily just in those sectors, just overall. It's the weakest month of the election year. So that information we can use to put into our pocket as we make decisions on swing trades or investments, things like that. From a long-term investing strategy, those are facts and details and stats and information that are very, very helpful. From a swing trading strategy, they're helpful if you layer them on top of some tools and information that you're using. And I'm going to do that right now. As a matter of fact, I am going to bring up my VantagePoint software. There we go. We've got the VantagePoint software pulled up, and you can see in the chart right up here that is the Dow. That is the Dow. Carl says, repeat the sectors. You know, we can put the sectors right into the chat right now. Energy, financial, and industrials or capital goods. Those are the three sectors, right? Right, there we go. Textile, Jim, yeah, there's a lot of factors that weigh into it. But regardless of whether or not we have a border crisis, regardless of whether or not we've had other things during election years that have been major things like recessions, like so many other major influencing factors, there's only been 6 years out of all of those that have been negative election years. So I don't disagree with you. There's different events affecting the markets right now, but it's safe to say there's always something major that can have an influence. And we've got to take all that into consideration, which is why I'm not providing any guarantees here nor providing any advice, just educational information. So we're looking at the Dow. Now, what we can see on the Dow right now is that we've got substantial movement in the Dow to the upside. As a matter of fact, we have had three bullish months in a row on the Dow. The market has moved up for the last 3 months in a row. And I'll show you that. I'm going to just drop a little line on here that I call point in time price. By the way, what I'm looking at, this is a charting program that I use. It's VantagePoint software. I don't know if everybody here has seen VantagePoint software before or use it in any way, shape, or form, but it's the program that I use to do my analysis day in and day out. Matter of fact, if you're in this session and you haven't seen VantagePoint software before, let me know in the chat box. Always interested in knowing if we have some new people. I can walk through the software, or at least how I use it, at a pace that doesn't leave you behind. Obviously, I don't want to talk over anybody's head, but at the same time, I want to make sure that the information that I'm sharing today is relevant and useful. So go over to the live chat and just pop a note in there and let me know if you haven't seen or don't have VantagePoint software in this way. I can slow things down if we need to. All right, taking a look at the screen, you can see the E-mini Dow, and you can see this is right here the November opening price, November 1st, and this yellow dotted line is starting the November opening price. Okay. The next opening price is December, and it's way up here. So the Dow opened in November at around 33. Let me see. The open on that day was 33,305, and then it opened in December at 36,325. Right? That's a substantial move, right? About 3,000 points. So when we take a step back, we say that's one bullish month. And then we go to January opening price, and we can see the January opening price was 37,982. That is two bullish months in a row, right? And then we go look at February opening price, and February's opening price was 38,218. So we've got November, December, and January all being up months for the Dow, 3 in a row. Thank you. I'm glad you're part of the family there, Justin, and then Lightheart. Tracy, thank you for letting me know that you haven't been exposed to the software before. Right now we're looking at the charts, and I'm just using a custom indicator that I have that shows me the month open prices. So if I leave you behind anywhere, don't hesitate to pop into the chat for Tracy or for anybody. All right, so now we're into February. This is the February opening price, and the February opening price, as I said, was 38,288. And we can see currently prices are above the open. That means currently February is a bullish month. Well, if January, for instance, was up about just under a point, right, from the opening price of let's see, 37,982 to where January closed or where February opened, we're talking about under 1 percentage point gain. So that's a bullish move, but weaker than we saw in November and December. That's usually the case. We can see some of that stuff happen. January is not particularly a strong month on the election year. It's not one of the weakest like February, but it's not particularly strong, which means the performance that we had in January, is going right along with that 123-year stat that I was talking about, right? Bullish, not extremely strong, still an up month. Well, when January on the election year closes as an up month, that stacks the odds in the fact that 2024 is expected to be a bullish year. So we can see that progression here on the chart by seeing that it went from here in November to here in December to here in January, and still bullishness. So bearish means down, yes, bullish means up. Hopefully I didn't mince those. So in this case, we've got bullishness here for January, and so far bullishness here for February on the Dow. Now VantagePoint, what I'm looking at, I'm going to get rid of this dotted line. For those of you that don't use VantagePoint, let me just remove that here. This blue line over here all the way on the right, let me zoom in for you a little bit. This blue line right over here on the right shows me that the trend is expected to move higher for the Dow. The overall trend is expected to move higher today for the Dow. That's a bullish expectation in the overall trend. Matter of fact, the Dow says the VantagePoint software has a predicted high and a predicted low. This is a gray bar with a predicted high that's expected to be higher. So for those of you that use the VantagePoint software, you can see we're expecting higher highs today, but also expecting lower lows from a Dow standpoint. Okay, that's information that I think everybody would want to have at your disposal, information that's necessary to have. Right now, the Dow's at 38,765, right? VantagePoint is saying that we could see 38,816. So it's already in the upper region of what was expected for the day right now at 11:45. This information was available in the software at 6:30 p.m. Eastern time last night. Now over here on the right, we can see that the neural index, this is a little red bar. Let me get a pen here so I can highlight it for you. There we go. Got my pen. This little red bar right here says that we are expecting overall weakness from a price standpoint. So we're not expecting any major rally. As a matter of fact, we can see that we have a 52-week high up here. This resistance point right up here at 38,892 is a level that I've got to keep in mind, because as prices get up there, the neural index is saying there's really not a lot of strength to break through that 52-week high. And we are also going to look at predicted momentum. So, pardon me. What I have here on the chart is everything telling me that we can see prices continue higher up to that 52-week high. But from there, we've got to really understand what momentum is saying to see whether or not we expect it higher. Now, mind you, based on the stats we were talking about election years, election months, and February, the fact that prices can get up to that 52-week high, which happened on the second day of the month, means it's going to take some major momentum to push past that. The January performance of the Dow was just under 1% gain, and we can look at February and say if it's a weaker of the months, then we could expect around that same kind of gain, if you will, for February, if we're putting some stock in that seasonality, that historical information. We're going to put a little bit of value in that, but we're going to lay that information on top, in this case, the artificial intelligence indicators, right? So when we look at this, we can see that there is still some bullishness left in the trend. There's some weakness left in price. And now we look down here at the momentum indicators in the VantagePoint software. For those of you that don't use these are predicted differences. And they are oscillators that can tell you what the momentum is expected to be 1 day in the future, 2 days in the future, and 3 days in the future. These are patented indicators. For those of you that don't know, VantagePoint is a patented program that identifies and predicts price 1 to 3 days in advance. If you look at this, you can see that we have from here, this is our 3-day momentum indicator. We're getting bearishness on that 3-day momentum indicator from the beginning of February. This is the opening price of February, this day right here. So we can see that from there to where this momentum indicator was, we've got a negative sloping line. Bearishness from a momentum standpoint. I can go through all my momentum indicators and indicate by looking at these and saying there are lower highs and lower lows happening from the 1, 2, and 3 day momentum indications. And again, in today's session, I'm not digging into all the ins and outs of all of the indicators. That's not what this session is intended to do. Today's YouTube Live, what we want to do is understand what the election year, the election month, and what the artificial intelligence is saying together, so we can walk away with a good swing trading strategy, idea, or sentiment, as I like to call it. So in this case, what I'm saying is I can see prices up around 38,880, let's call it, and then consolidating, moving sideways off of that, and even potentially pulling back slightly. That's what I'm seeing from the predictive indicators, because momentum is leaving the Dow from the beginning of the month to today. Strength is a little bit weaker than I'd like to see it, even though trend is still bullish and the predicted high is still bullish. So we've got a mix match of indicators. Right? We've got trend saying up, we've got a predicted high saying up, got a predicted low saying down, we've got some weakness and momentum pairing off, momentum somewhat shifting. Knowing that February, again, is the weakest of the election year months, and right now it's up bigger than January, tells me I've got to be on the lookout. We can look at Krish, we can look at IWM. Sure, we can look at IWM here in a second. I want to do all the analysis we can on the Dow, since that's the index that we have the stats on that I'm digging into, but I'll save some time here at the end to take a look at some of those other ones. All right. I can go further with this analysis to really understand what I'm getting from this. And one of the things that I like to do is use support and resistance. I've got some indicators in the software, so I don't have to calculate support and resistance myself. You may have some of those to your advantage. If you have the VantagePoint software, these are called the verified support and resistance zones. And it gives me resistance levels and support levels, as well as support and resistance zones. These green areas are support zones. This tells me where the bulls and the bears are waiting, right? I know there's a lot of bears sitting up here and waiting. Well, I know if prices get down here, I've got bulls sitting down here waiting to buy it up. Bulls want to buy it up to push it up, and bears want to sell it off to push it down, right? So now I have those levels. I know where those bulls and bears are sitting. We are already approaching this 52-week high, which is a resistance level. It's not a verified resistance zone because there is no point that's higher to give me a second level. In case you're wondering, this zone is created by two support points, right? This is one support point. This is another one. We connect the two because we have this envelope, this area where if prices get in here, there's bulls trying to push it back up. So we've got that identified here. We don't have that on the resistance side. Why? Because there are no levels that are higher than this recently for me to track. That's important. That tells me this is a very strong resistance level. For those of you that know support and resistance, you know how strong a 52-week high can be in pulling prices or holding prices down. You probably also know how strong a 52-week high can be when prices break through and we get a couple confirming closes above that, how that can springboard prices higher. So we've got to be on the lookout for both of those. I use the momentum indicators that we just analyzed and the predicted neural index in the VantagePoint software to understand what can I expect. And at this point, what I'm expecting are prices not to move past that level very easily at all. As a matter of fact, for the rest of this week, I think that 388.80 is a number that we can keep our eye on, or it's, excuse me, that number, let me put my cursor on it right here, 388.9. 38,900. 38,900 is the number that I'm saying, all right, for prices to get above that and stay above that, we are going to need a shift in momentum to be bullish. Right now, the VantagePoint predictive momentum indicators aren't saying that we're getting a bullish shift in momentum. As a matter of fact, they're saying the opposite. We're getting somewhat of a bearish shift in momentum from those indicators. Is there anybody here that uses momentum indicators like RSI, MACD, any indicators like that? If you do, just go over to the chat and let me know if those are momentum indicators you're familiar with. A lot of people use it for a lot of different things, but what they're really, really good at is helping you understand whether or not there has recently been some bullishness or bearishness from a momentum standpoint. The problem with those indicators, if you're using them on a consistent basis, you probably know this, I'm not telling you anything you don't know, is that they are lagging, right? They're past price. They show you the momentum that just happened. In the VantagePoint software, I like to use them because they're actually predictive. You see, we've updated the formulas to include predictive information in the actual formula. That predictive information is being used, is being generated by the artificial intelligence. And the reason I was asking if anybody's using them, because I'm going to put them on the chart, and I want to make sure that if you're familiar with them, then you understand what I'm looking at. If not, I can kind of walk through the details a little bit. So here's MACD, here's RSI. I even have a predicted stochastic. I'm going to put, matter of fact, I'm going to put MACD, RSI, and stochastic all on the chart together so that we can look at them, right? PSI is not a momentum indicator that I'm talking about, Chris. That's professional sentiment. That is something that looks at the professional movements of the market. I'm probably not going to dig into that one today. These indicators, by the way, this MACD, this RSI, and stochastic, they're predicted MACD, RSI, and predicted stochastic simply because what we have done with our AI is enhance the formulas to include predicted price. You see, the AI predicts price, typical price in the future, 1, 2, or 3 days in advance. And that predicted price then can enhance these indicators. And by the way, we have studies upon studies, and we have actual use. This technology has been out helping traders since 1991. And by the way, if anybody's interested in those studies and this information, and you don't have it and you're not a VantagePoint user, you can go to VantagePointForecast.com. and you can see what some of that analysis says about how powerful these indicators are. Yeah, Justin, I'm sure you do, Krish. Yep, the long, medium, and short-term differences and RSI, stochastics. Okay, good. So we've got some users of these indicators here in today's session. These indicators are very, very, very easy to read, right? All I'm looking for, here's the MACD one. I'm gonna hide part of this MACD line so that you can see it a little bit better. Here we go. On this MACD one, all I'm looking for is to figure out where the blue line is. Just like a regular MACD, this is moving average convergence and divergence. The difference in the software is this is a predicted MACD line, the blue one, the blue glowing line on the screen. So I needed to compare it to a regular moving average that isn't predictive. And if it is below, that's indicating bearish momentum. If it's above, like over here through this entire uptrend, that's indicating bullish momentum. The key is when the cross happens. Look, I'm going to back up on this chart just to show you what I mean. Look, this is where the cross happened on this one, November 1st. You can see MACD crossed from below to above. This is where the momentum in MACD was strong enough that it was saying there is bullish momentum. Well, if we look at all of our indicators on that same day, they all agreed. Bullish, bullish, bullish across the board. And then MACD didn't change its tune until right over here. This is at the very tip top. This is it's remarkable how powerful these predictive indicators are on. But at the tip top of this trend, you can see that MACD changed its tune and said, oh, momentum is predicted to leave this trend, and pretty much almost picked off the top, right? And then we got another shift going on here. But the reason I want to show you this is just so that you can get a good look at what the MACD is doing right now. Remember what we said about February being the weakest of the election months. Here we go. This uptrend, MACD is channeling. I didn't draw a very good channel there, so let's try again. It's banging around like a pinball. It is channeling, and it is just moving up and down in this really tight range. And when you see that happening, when you see that channeling happening, that means one thing in my book, and that means momentum. I'm on RSI, I apologize. There we go, same area. Channeling. Momentum on MACD is indicating consolidation, right? Consolidation. When you stop and you look at this and you say, hey, wait a second, this line is moving sideways across the screen. And Kostas, this is where it becomes very easy. They're color-coded, green up, red down. These lines sideways. They're going to point. They're going to tell you. If it was bullish, this line would be pointing up. If it was bearish, this line would be pointing down. And I like to oversimplify the reading of that, Kostas, for that reason, that the interpretation of the indicators can be as difficult as you make it or as simple as you read it. And I try to oversimplify things so that I don't have to stare at these indicators a lot. I live my life in them day in and day out, but we've made it very easy by color coding and indicating how to read these based on either the color or the angle that it's pointing. In this case, it's pointing sideways. You can see this channel. Look, if I was to outline the highs, right? If I was to outline the highs somewhat, I didn't tap all the highs, but the highs in this trend from this point on until this point when it shifted again, price either went nowhere or went down. Well, if I was to highlight the lows in this situation, price is going up because momentum is pushing it up. But if I isolate the end of this, I can see that this low and this low are almost exactly the same, and this high are almost exactly the same, which means I am in a channel. So by oversimplifying it that way, I can see that RSI, MACD are pushing sideways across the screen, and so is stochastics. Same scenario. If stochastic was below, the blue line was below and pushing down, that's bearish. Blue line is above and pushing up, that is bullish. What would you say if I said the blue line and the black line are just intertwined and pushing sideways? You would probably walk away from that saying sideways. So now what we know about the Dow is that we can expect a higher high than yesterday. Yup, got it. Momentum is shifting, waning, pulling off of this in the month that is one of the weaker months of the election year, February. Which means the market today is performing exactly how VantagePoint indicated it would perform, and what happens the rest of this week is yet to be seen. What the AI is saying is that 38,900 is going to be a very tough number to beat based on what the momentum is doing, based on the election year, and based on what we can expect from the Dow, which means we could see a bit of a sell-off the rest of this week unless we can get a shift in momentum pushing bullishly, right? Nothing is perfect. Nothing is 100%. But what the artificial intelligence is clearly saying in this example here with all of the stats we reviewed today is that the Dow is reaching a level, a price that is going to be hard to maintain, which means the bullishness in this Dow is starting to wane a little bit. right? Which means I can expect some consolidation. Am I saying crash? No, I'm not saying crash. VantagePoint is not saying crash, and I'm not reading crash in the software. I'm not an advisor, and I'm not a market analyst. I'm looking at the software, and the software is telling me consolidation from the point it's at right now, even a little bit of a pullback. But as far as crash goes, I don't see that yet at this point in the software, and I'm just reading the software. Now, remember something. When the Fed was talking about interest rates, and there's going to be more talk of interest rates, delaying the interest rate drop, that kind of conversation, that kind of talk tends to create a pullback in the markets, whether it be a short-lived one-day pullback like we've already experienced this month so far, or whether it's something that's a little bit more extended. No matter how you slice it, there is a lot of talk about interest rates. Interest rates not going down as soon as people thought. The Fed saying that, it's not time to ease off just yet. All of that conversation creates emotion, creates trader sentiment. All of that is happening right now and is expected to keep happening, which means by using the VantagePoint predictive information, it's already telling me there's momentum shifting. The artificial intelligence, the AI sentiment in this case is saying the highs we're experiencing right now are going to be hard to hold, and we've got to consider that as we're talking about protecting our capital, managing our risk. There's a lot of different ways to trade this. Selling options, short selling the market, very, very short-term trades, day trades, swing trades, things like that, delta neutral strategies. There's a lot of ways to play these kind of market conditions. And if you don't know those ways, then that's something you want to study up on. But what we're seeing is a difficulty to push higher based on everything we've reviewed so far. Now, we can take it a step further, right? We talked about some of the other sectors we were talking about. I can go into some ETF sectors, and we can look at, I'm trying to think of the energy ETF. Let's see. If I go energy ETF, XLE. Energy is the strongest sector during an election year, right? Here's the chart for XLE. And when we look at XLE, what we're seeing is, again, we can look at this and just kind of do a quick cursory view and see we've got green indicating bullishness, but that blue line sideways, and these lines are touching. These lines touching, saying we're expecting a trend that is expected to move sideways today. The trend is expecting a slight higher high and a slight lower low. That is an outside candle, which indicates sideways as well, right? We've got some strength because the neural index is green. We have momentum shifting off. Look at this momentum shifting off on the 2 and the 3-day momentum, but look at the momentum in the 1-day coming on from the beginning of the month. I'm talking about from the beginning of February, right? The beginning of February was right here. So we can see that we've got a little bit of short-term momentum coming in from a predictive standpoint. So again, we've got mixed emotions around this. I shouldn't say mixed emotions, right? I want to take emotion out of it. We've got mixed predictive indicators. Some say up, some say down, some say sideways. If you and I were sitting here talking, we were looking at forecasts or anything in the software, and I said, some of these indicators that are predicted to be up to 87.4% accurate in their prediction, they're measured and they're tested to be extremely accurate. And I said, 2 of them are up, 2 of them are down, and 2 of them are sideways. Go to the chat, go to the live chat right now and tell me, if I said that to you and we were sitting here at a table just talking one-on-one, what would you expect that asset, in this case XLE, to do the next day? It's just a test for everybody in the room to see if you're picking up on this information. XLE is expected to be the strongest sector during an election year, although February being the weakest, and those indicators are saying, some are saying up, some are saying down, some are saying sideways. Do me a favor. I'm going to get a drink of water, go to the chat, and just tell me what you would expect. Do a lot of talking. I guess I should have my water ready, but I just want to make sure that, you're following along, you're seeing what I'm seeing, and the conversation around what this artificial intelligence is capable of doing is making sense to you. At the end of the day, these live sessions are designed to provide you some education and some information that you can use. So John says would not trade. Yeah, some people may look at that and say, you know what, I don't have a bias one way or the other, up or down, so I wouldn't trade. Is that you? Chris says sideways. Okay. Yeah. That's what the AI is telling me. Knowing about the market conditions. Mojo, nice to see you. by the way, my friend. I haven't seen you. I didn't see your name in before. Sideways. Carl is a no trade kind of Carl. Carl says, you know what? I don't. So when we're thinking about the energy sector, even though it's an election year, even though it's the highest performing sector of the year, February is the weaker of the months, and the AI is saying, not now. Carl's saying that's enough for me to say I'm not trading that. As major stock like XLM, CVX, and crude not doing well, sideways, bro. So I think we're all kind of getting the same information, JS. And so far, everybody is coming through with the answers that I would expect based on the information in front of us. Now, when you look at your trades and your information and your data, you got to look at it the same way, right? Don't try to convince yourself that these are bullish or bearish, right? There are three directions to the market: up, down, or sideways. There's three directions that any asset can go, right? Because time doesn't stop. So even if the price stays where it is for 1, 2, 3 days, that's sideways movement, right? So you got to consider that. You got to look and see. Neutral to slightly bearish, healthy lifestyles. I appreciate that input there. Consolidate for Jim. Hey, Jim. Hope you're feeling better, my friend. Nice to see you in here. Lori. Yeah. I hear consolidation, then what? Well, remember, this is about a forecast, Lori, that goes out 1 to 3 days in advance. So our forecast that came out at 6:30 last night is saying, well, the 1 day is consolidated. The 2 day is consolidated. The 3 day is consolidated. So we're expecting sideways for, a couple of days. Today being one of those days, tomorrow being one of those days. We're not going to predict a month out in the future. We're not going to predict a week out in the future. Hopefully nobody's trying to do that. I mean, I don't even know that they can get the weather right 10 days out, If you check the weather, you got to, as you get closer to the date, you got to keep on digging, and keep on watching, and it changes. 3 days gives you the highest period of accuracy. The best accuracy can happen within 1 day. And then you lose some of that accuracy out over 2 and 3 days just because of time, right? John, I love it. John says, gotta trade what you see, not what you wish. I love it. John, you can hashtag that. Hashtag not what you wish, right? I'm gonna give you a little 100 on that because I love that. That's great. That's great. Hadn't heard that one before, but I may steal that or borrow that from you if you're okay with that, John. Just let me know. All right, so that's XLE. Now let's go check XLF. Let's do the same kind of analysis on XLF just so we can get a sense of what's going on. All right. Here's XLF. Wow, this looks a lot like the Dow. Check this out. Here's the Dow. I'm gonna kick the Dow back to make it look like the other chart. Look, I'm just gonna take off these indicators here. All right, so we're back to kind of a 3-month default view on the Dow, and I'm gonna put it right next to XLF. Check this out. Here's the Dow, here's XLF. Tell me those don't look very, very similar, right? Very, very similar. Lori, I see what you're saying. What next? Now you know the direction is sideways. What do you do with that information? I see what you're saying. What does your trade plan say? In a period of consolidation, is that a risk mitigation maneuver where you got to say, oh, things are going sideways, I'm getting out, I'll wait for them to go up? Is that a tighten your stops maneuver so that you can see where things can consolidate and still be in that position in case it takes off, but protect your downside, right? Or in consolidation, do you add to your position expecting it to go higher? Now, in this case, we're not expecting much higher so far over the next few days. So you've got several strategies that you can apply. You got to look at your trade plan. And like some other people in this session say, like Carl says, that's a no trade for me. Carl says, if I'm not in that, I'm not looking to get in that. Well, Carl, if you're in that, what are you looking to do? And I think that's Lori's question. I'm not going to answer it for you, Lori, because I don't have your trade plan. I don't have your capital, your risk tolerances, to analyze all that to say this is what this trade plan calls for. But I can tell you, in a trade plan that is a risk-on trade plan where you're looking to make money in the markets, consolidation in my book means if I'm not in position, I'm waiting to see. Maybe if I'm expecting some bullishness past this forecast, I can get into a very small position, not 100% risk, but maybe I use a quarter of a risk ratio. If I'm willing to risk $10,000 per trade, maybe I'm only putting $2,500 in to see how this can play out based on this information. But you gotta use your trade plan to do that, right? Burl says hold for a new signal. Yep. Okay. Chris says expecting it. Oh, you want to check XLV? We'll check that once we're done with our election year stuff, Chris. All right. Here's XLF, and I was showing you how similar they are. The Dow is on the left, XLF, the financial sector, is on the right, and they're almost identical. So the consolidation we're seeing in the Dow can have an impact on the consolidation we would see in XLF, and we are getting consolidation expectations in XLF. It's pretty clear that blue line is moving sideways, but still green and bullish. Ooh, we got nice bullish strength here. Look at that. Good, nice bullish strength here. So we could see a pop higher in this based on that strength, except we have some momentum that's peeling off from the beginning of the month. So if we do get a pop higher, it's one of those things that is like, okay, if it pops higher because the Dow went higher, remember the Dow and this have a very strong correlation. And if you didn't know that, now you do. The Dow and XLF have a very strong correlation. They're tied together. They have a positive correlation. We can look at it and figure out how positive that correlation is in our software here, but we can see that as a very strong positive one. So if the Dow has a big push higher in XLF, it is not expected to keep on pushing higher. It is not expected to be sustained based on what the artificial intelligence is saying. XLF is not expected to move higher than that high we've got here. We got a 52-week high at, where's this high? 39.45. But I'm looking at this high saying 39.16 is something that's going to be really, really hard for XLF to push past. That is the high of the last 72 hours. The fact that momentum is peeling off of this, even though it's been strong for 3 days on the neural index, we are not getting a whole lot to support a push higher in XLF. The only thing that's supporting a higher price in XLF is the fact that the Dow is so high, but then I would expect it to peel off of that high because it can't sustain it by itself. The Dow can't push the XLF higher by itself, and the AI is telling us that. So that is XLF. That's the financial sector, and then we have industrials or capital goods. Let's look. XLI. Ooh, that one's this one's the strongest of them all. Check it out. When I look at XLI, I see a couple of things, all right? I see bullishness. The blue line is above and pushing higher. I see a green predicted high, a green predicted low, a green neural index. Bullish momentum on the 3-day, bullish momentum on the 2-day, bullish momentum on the 1-day. I have 100% of my predictive indicators on XLI pushing bullish at 6:30 last night. Looking at this is something that you can see on a day in and day out basis and realize there is some bullishness here that can push prices higher on XLI. Does everybody see the difference between what we've looked at on XLE, XLF, and now XLI? And you see how XLI, when you take a step back, you like, this one is the strongest of the ones we've looked at. Is anybody on today's live session not see that situation where we've got a strong forecast on the trend, on strength, on momentum, and the predicted high and predicted low? RSI, you want, well, I only have predicted RSI, Adamolo. I only have predicted RSI. I can't put a regular RSI on here because I don't use regular RSIs. I use predicted RSIs. And in this case, the RSI, oh, we got higher highs and higher lows. So we got an RSI that's creating bullishness here on this one. We can look back at the others while everybody is answering my question on, do you see the difference in the bullishness on XLI versus XLF and XLE? That was my question I threw out to the crowd. If you can go over to the chat and let me know if you see the difference, let me know. There you go. You wanted to see predicted RSI on this one as well. Not so good here, right? XLF. So again, our predicted RSI is confirming I wouldn't expect higher prices. The Dow can push prices higher, but they're not expected to stay up there. That's for sure. And then predicted RSI, sideways, sideways, sideways. All right. So hopefully that helps. XLI, the strongest of the three, and right now XLI is up almost 3/4 of a point. It's at 116.81. VantagePoint predicted a high of 116.26, so it's pushing nice and strong up higher. Very nice move on XLI, all predicted with the indicators last night. Fantastic. All right, good. I think those two things I wanted you to know can help you make decisions around the markets, especially if you have a tool like VantagePoint. I know not everybody has it, but you can use any charting platform. You can use any charting platform you want to do some of this analysis. The problem is you got to realize in those charting platforms, you're only looking backwards. There's nothing in the world. I mean, this is patented technology. There's nothing in the world that looks forward like VantagePoint and can predict in the future like this. So just remember that if you're using some other charting platform. But I'm not forcing you to use VantagePoint. It's just what I use, right? Yep, Justin, you got it. The predicted candle is better than the other two. Momentum is slightly better from a bullish standpoint. So that's what we were trying to get at. That's what we were trying to get at. All right, let's hop into IWM. IWM and just do some analysis on it now that we've covered all of our election year details. For now, I'll have more as the months go on. If you haven't already hit the subscribe button in the YouTube Live, do me a favor and just hit the YouTube Live subscribe right there on your screen so that you can get notified anytime we do a session like this. I do these sessions every few weeks on different topics. As you can tell, we're going to dig into the markets from whatever perspective we can, just so that we can walk away with some good analysis. Right now, we had a question about IWM, which is the Russell. You can see it on the screen. This is the ETF here. And when we look at the Russell Index, IWM, we can see that there is bearishness expected from the trend. We got a red trend predictor. This is a 2-day predictor. It's what I'm looking at right now. We are getting a slight bit higher high expected and a higher low, right? That still could be a down day or a down trend with a higher high and a higher low. And the neural index is red. And the predictive differences, the 3-day is creating bearish expectations, the 2-day bearish expectations, and from the beginning of February, the 1-day is sideways, so some consolidation there. And we will put on the RSI. Now, remember, RSI is one of those extra indicators that not everybody has or needs, but we look at it from a momentum standpoint, and we have bearishness here. So we could walk away. There's a lot more analysis we could do, but we could walk away so far what we've done on IWM and say the artificial intelligence is indicating bearishness, even though it's predicting a higher high and a higher low. Krish, I think that was you asking for IWM, if I'm not mistaken, earlier in this live. And you can see it's probably doing, I mean, my odds are on VantagePoint, 193.01. It has a higher high already, has a higher low, and it's currently sitting at 193.01, right? So it's sitting right here. Oop, past it. You get my point. It's sitting right in that area. Bearish on the day from yesterday. Good job, VantagePoint. XLV. Somebody was asking about XLV. XLV. Here we go. Healthcare Spider. XLV has a nice bullish trend expectation here. You can see that the blue line is above, the neural index is green, the predictive differences are strong and pushing higher. One thing to note, I want to point out to everybody, these are the highs of these predictive differences over the last 3 months, right? 2 of them are being hit right now as we speak. The 3-day momentum predictor still has some room to go to get to that high, which indicates that there's certainly plenty of bullishness from momentum expected. Plenty of bullishness from the trend expected, a predicted high that's expected to be higher, a predicted low that's expected to be higher, RSI momentum pushing bullishly. Everything from an XLV standpoint is indicating bullishness at VantagePoint, and prices are expected to be between 144.88 and 143.48. The high on the day is 145.03, and the low so far 144.07, playing to the high side. And I love what being wrong means. More money made. That is a great forecast that's generated quite a bit of gains today. So let me just look at the chat and make sure that's covered. XLV for Krish. All right. Anybody else have a stock or an asset or a market you wanted to take a look at? John, I've got your SLB. I'm pulling that up. I got about 5 minutes here that I can do another market or two. So if you want to take a look at one, pop it into the chat. Here's Schlumberger. You can see we're looking at 3 months of data on Schlumberger. We've got a big bearish forecast happening here. This is a strong bearish trend predictor. A very low predicted low. Neural index that's bearish. From the beginning of month to now, that momentum indicator, both of these momentum indicators are bearish. All three of these are bearish. I got bearishness across the board, John. I'm not sure if you were thinking about this from a long or a bullish perspective standpoint, but the only thing that says there may be a little bit of a bullish pop is that predicted high. And when you take a step back and you think about that, if this is saying that we could have slight bit higher high today than yesterday, that just means in my book, farther to fall on the day. This thing is not expected to be, from a price standpoint, heck, I would expect it to be lower than this. The predicted low is at 47.60. Based on what we're seeing here, John, unfortunately, I'm not thinking if you're bullish this. Oh, you got puts. John's like, I got puts. I like that. All right, I'm going to heart that one, John, because if you got puts on that one, then today is doing pretty well for you. Maybe even hit some targets, I imagine. All right, you can see that happening. FCX. All right, pull that one up. Here's FCX. We got some major consolidation going with FCX. Take a look at right here. We got a predicted high and a predicted low that are both higher than the previous days. We got a neural index that's green, but check this out. I'm going to put on support and resistance for you because I saw it as soon as I opened the chart. Not sure if you saw it, but we are in this channel. Prices have been banging around. This goes way, way back. This channel, not as far back. It's getting tighter and tighter and tighter. So we are channeling on FCX. That doesn't mean you couldn't have some short-term pops in price. The trend is consolidating. The predicted high is higher. Momentum is lower and predicting bearishness. So again, we are in consolidation station here, and we have been for quite some time. And both the support zones and the resistance zones are acting like a vice. They're pressing down on price. They're keeping price consolidated, and they're consolidating more and more. We will get a support or a resistance breakout on FCX. It's just not expected to happen right now. When you get one of these prices to break through these resistance levels or break through these support points and get confirming closes outside of those levels, well, then you enter from a consolidation mode into a trending mode, and there could be some really great gains there. VantagePoint is not predicting that at this point. It's saying this channel that's happening right now is expected to continue. For me, that's not something that I get too excited about, as you can tell from my voice. When I see something channeling like that, the best maneuver for me is to go sell some 43 calls and maybe some 37 puts outside of both of those support and resistance levels. From an iron condor standpoint, there could be some good opportunities there, but that's all up to you and your trade plan, right? All right. Short-term different looks good each chart. Short-term different, I'm not sure which charts. I didn't see that comment, Justin, so I'm not sure what charts you're talking about, but the short-term difference is about 1 day. That's about today. So that has certainly played itself right into the markets. Here is Tesla. Claudio, my question for you on Tesla, were you able to short that opportunity out of the VantagePoint software? Because I know you're part of the VantagePoint family. Did you short that? Did you buy some puts? Did you sell some calls? Did you do something to play this to the downside? Please tell me yes. Attilio, my friend, I just saw your name. Thank you for joining. Thank you for being part of the VantagePoint family. I haven't seen your name pop up in ages, so thank you for hopping in today. I see it. I see it. All right. Hopefully that's the case, Claudio. What are we expecting from Tesla right now? Take a look. Take a look. Right here on the screen, you can see that there's a predicted high and a predicted low that are expected to be higher. There's a neural index that's bullish with bullish momentum working itself in from 2 of the 3 momentum indicators. The 1 day is sideways. This is indicating bullishness today, but the overall trend has been down for so long. This is not expected to be a sustained bullish trend reversal, just a bullish pop. I can go to my one-day crossover and see that there is some consolidation on that one-day crossover. So I can get a nice high move out of price today. It's just not expected to be sustained. And that's one of the things that everybody's got to understand. When I say sustained, I mean one-day move. Sure, it's there. We can see a one-day bullish move expected here, but not a trend reversal, not a beginning of a new trend to the upside. This is just an update in a downtrend or bullish price in a downtrend. And that's what the artificial intelligence is telling me. I don't know what it's telling you, but it's not at that point. The question on the table or in the chat is it a buy now? I am not going to answer that question because I'm not providing trading advice, but what I can tell you is that the artificial intelligence is indicating for me that any bullishness we'd be experiencing right now is short-lived. Use that as you may. And with that, I am signing off. This has been a great session. Thank you for your interaction today. If you're part of the Vantage Point family, thank you for being part of the Vantage Point family. I'm just going to pop off the chart there. Say that again. Thank you for being here. Thank you for listening. If you're not, click on that link in the chat. You can go to VantagePointForecast.com if you want to dig into the details. And as always, happy trading. Have a good day, everybody.